All right, good afternoon. Welcome back. Today is, I don't know, let me guess, Wednesday, 26th day of July, 2017. More audio issue. Well, first, we didn't have any monsoon. Then we had internet. So it only makes good sense that we would have no sound on the intro. So, anyway, hip hip hooray. Michael, can you hear me all right?
Yes, I can.
Well, then I guess we'll have to live with that. All right. Fair enough.
That is fair enough.
This has been one crazy week. Oh my goodness. It really has.
It's been a wild ride this week.
Wild ride. Man said it was a wild ride. Alright, at least the YouTube channel loaded up properly. So it seems. I wonder if there's sound there. Sound? YouTube sound. I think something might be amiss with it as well. I know people can see the charts. I don't know if they can hear it or not. Oh well. If you cannot hear my voice, you won't hear these instructions, but what the heck, use them anyway. Go to our homepage at cfrn.net. On the right hand side of the page, click the big microphone. Follow the instructions where it says watch live now. Click that. 30 seconds later, you'll see the charts and you'll have access to the chat box. Okay? And I would normally just tell you to go right to youtube.com/CFRN. But for some reason, it doesn't seem to be working today like it's supposed to. Although we are streaming live, I can see that. Clear as day. Let me try loading it one more time, see what happens. I think not much. Yeah, something's wrong. I wouldn't blame it on YouTube, but they got pretty fancy equipment, so I'm going to guess something on our end. Maybe we'll get it figured out, and maybe we won't. You just never know. This thing's been mystifying me. I spent hours on the phone with the tech guys the other day, and it got us nothing. Absolutely nothing. I knew something was up as soon as we fired up today, but I could not isolate what it was. All right. So let's take a look at the numbers. Let me get them up here, and then we'll go to Michael, get a recap of everything that happened today in the live training room. Were you able to make that call, Michael?
I sent the information that was needed, that was requested. So, yes.
Okay. All right. Here in the U.S., the Dow up 105 points. NASDAQ up 14. S&P 500 up 3. And the Russell 2000 down 2. No movers, no shakers in that bunch. In the commodity basket, crude oil up 72 cents, trading 48.61 last. And gold down $4.20, trading 1247.90 last. And in the Asian markets, the Nikkei closed up 94 points today. It's almost half of 1%. Shanghai closed up almost 4 points, and the Hang Seng was up 88 points. And in the Europe, so everything's green in Asia. In Europe, the color is the same. FTSE closed up 17.5. The DAX closed up 41. And the CAC closed up 29. And everything's green here in the U.S. as well, except that Russell, which is down just 2 points. The Dow ran up 100 points today, hitting a record high as Boeing and other companies post strong earnings. Now, Michael, the dollar is inching up as investors brace for Fed guidance. A reminder to everyone, we had crude inventories today. Oil prices are up on bigger than expected 7.2 million barrel drop in U.S. crude stockpiles. Wayne Jett will join us at the top of the hour. John will join us between now and the top of the hour. And tomorrow is every other Thursday, and Ed Corey will be joining us tomorrow at roughly 12:45 p.m. Eastern. So, Michael, if you're ready for the recap, we're ready to hear it.
Okay, I am ready. There.
Looks like the YouTube's working now as well, so good for that. YouTube.com/CFRN.
That's good. All right, so
I'll hit mute. I can see your charts, and I'll be here when you're done.
okay, all right, that sounds good. Okay, hang on. Abort. Okay, well, anyway, let me show you what is going on here. Sorry, I tried to do an install here and shouldn't have done it right now. Okay, so here we are. Good afternoon, everyone. Today is Wednesday, the 26th day of July, 2017. If you have not taken a free trial with us, go to the homepage here at CFRN.net. And this banner is going to drop down right up here at the top where it says sign up for the CFRN Live Training Room, 100% free trial. Use our indicators, learn our strategy. Click here. Once you click there, it'll bring you here to this page where you just have to give us your first name and your email address. Click on register now. When you click on register now, you'll be sent a confirmation link. Okay, that confirmation link, you need to click on that confirmation link, all right? Because we don't know you took the trial until you click on that confirmation link, all right? Now, the spreadsheet. If you're going to read the spreadsheet, you read all the CFTC risk disclosure stuff down at the bottom. Okay, so today, 726, made 8 ticks in soybeans, 12 in crude, and that is all we did today. That is what we did today. On the month now, we're up 2,597. That's over 16 days, averaging 162 per day. Okay, today it took 19 minutes and 2 trades to get to the goal for the day. They were both in soybeans. One was for 6 ticks and one was for 2 ticks. And we took a total of 11 trades today. Okay. On the year now, 21,532. That's over 138 days, averaging 156, I think that says. Yeah, 156 per day. I still don't have my glasses on. All right, so let's go and take a look at what we did or did not do. In here on the gold, we missed this first one right here, and then we're going to break even here and break even there. Since then, it really hasn't had anything. Okay, again, as Dwayne said, we have FOMC coming out, so gold and the indexes are places you do not want to be when they come out. Okay. All right. This is the euro. We did nothing with the euro today. We did nothing with the euro. There was one momentum short trade right here, and that was about it all day on the euro. During the break, there was a bounce off the BBC right here after we had broken this dynamic support. That one leg down right there, and that was it for the euro today. Okay, and crude oil. Crude. But we had crude inventories come out today, and after looking at the API numbers from yesterday, I figured we were going to have a bigger than anticipated draw. So what I told everybody to look for before the inventory numbers came out, I said, look for price to spike up to this level, and then work its way back down to this level. Okay. And when the inventory numbers came out, that's exactly what it did. It spiked up to that level, and then worked its way all the way back down to this level, and now it's worked its way back up to that level. But now that I gave that information out ahead of time, we can see what it actually provided for us, okay, in the shorter time frame. Once the data is loaded up here. Okay, here we go. Before the inventory numbers came out, we had a break-even trade here. Then the inventory numbers came out, and we waited, and we had one tick profit there. Then I said, watch for him to go down here. I actually, when I did that, let me show you. I think it's right here. Yeah, when I did that, I'd actually at 10:47 taken a screenshot of the options prices, and the 48 puts, which are right here. The 48 puts were at 105 by 106 at that time. In the few minutes after that, when they dropped all the way down here to 48, they went up to like 136, I think. So there was a chance to make money on that too, if you wanted to. But we had one tick profit there. We had 4 ticks profit here. I think I feel like we're missing something in here. 1, 2, 3, 4. Yeah, we are. We had 1 tick profit there. Then in here, we had a short for 4 ticks. Then we missed that one. And we got this one for 6 ticks to bring us to plus 11. And then we got a break even there, and plus 1 there to get us up to plus 12. And that was it. Everything since then has just been flat. It came right back up to that level that I had identified. I think I did that at like a little after 10. I identified that level, and that's where it went to, right back up to there. All right, so on the crude, we ended up with plus 12. On the soybeans, we had this one here to start out with, 2 ticks on that. This one right here was 2 ticks. Then this one right here was 6 more ticks. And then we had a break even right there. Oops. We had a break even right there. During the break, it had a big run up here. It broke this dynamic resistance, had a big run up, but right here, see the slingshot's not right for a long trade. So the only place that it would have been right would have been right over here. The possible long trade in there. Okay. And the ES was just totally flat. Totally flat. All right. And that's it. That was our morning. Okay. So back here, if you can look at the spreadsheet, read all the CFTC risk disclosure stuff down at the bottom. Today is the 26th day of July. Made 8 ticks in soybeans, 12 ticks in crude oil. Got us up to 220. And well, let's see. Took us 19 minutes and 2 trade opportunities to get to the goal for the day, and we took a total of 11 today. So on the month now, we're at 25.97. That's over 16 days, averaging 162 per day. Down here at the bottom, on the year, 21,532. That's over 138 days, averaging 156 per day. Okay. Now, if you have not taken our free trial, then just go to the homepage here at cfrn.net. And when you do go to the homepage, you know, this banner is going to fall down on the top right here. Sign up for the CFRN Live Training Room, 100% free trial. User indicators, learn our strategy. Click here. Click there. Put in your first name, your email address. Click on register now. And when you do that, you will be sent a confirmation link that you must click on. Okay, because when you click on that, that's when we know you took the trial. Okay. All right, and that is all I have for today. The hell, how much is it a tick for soybeans and crude? Soybeans $12.50, crude is 10. It's $10 per tick on crude and $12.50 per tick on the beans. Okay, so you need 8 ticks on soybeans or 10 ticks on crude to get the goal for the day. Okay. And the rest of the market's 6 1/4 here on the euro, 10 on gold, and 12.50 on the ES, 5 on the YM. Okay, and it's also 5 on the Russell right now, and the NQ. Okay, and with that, we can pass it back out to Studio A, fabulous Phoenix, Arizona, Monsoon Town, overlooking country's largest city park. I hear you, but I do not. There it goes. Okay.
Alrighty. Here we go. So yesterday, guys, we took a look at the big run-up which happened off the European Open at 3 a.m. And then we went sideways right above last week's zone. We said, now let's see where we go the rest of the week. As you can see, we spiked just above yesterday's highs early this morning. We did spike just below the lows of yesterday's day session. But where do we find ourselves today? Right inside of the weekly trading zone at 2475/76. True story. Alright. So what was the recap of the recap, Mike?
Today it took 19 minutes and 2 trades to get to $100 per contract.
One more time for the folks at home.
19 minutes and 2 trades to get to $100 per contract.
Good job.
All right, thank you. Thank you very much.
Alright guys, let's take a look at some headlines, see what's happening out there in the big wide world. Again, the biggest news of the day, of course, is the Fed announcement this afternoon. Now, the Fed has said that they were going to be pretty aggressive with the rate hikes, but some of the back channels, to use a popular term, say that they may not be as aggressive as they once thought they would be. The big Trump news today, his tweet of the day. President Donald Trump tweeted today that the U.S. military would not accept transgender people, saying their service would cause tremendous medical costs and disruption. After consultation with my generals and military experts, please be advised that the United States government will not accept or allow transgender individuals to serve in any capacity in the U.S. military. Trump's announcement is a reversal of President Barack Obama's decision in 2016 to allow transgender people to openly serve, though the implementation of that policy has been delayed by Secretary of Defense Jim Mattis. Pentagon's statement to Business Insider referred all questions about the president's statements to the White House, but did say the Pentagon would work closely with the White House to address the new guidance provided by the Commander-in-Chief on transgender individuals serving in the military. Senior officials in each branch of the military had voiced opposition to Barack's decision. Unlike Obama, who took an active hand shaping the Pentagon's operations, Trump has been known to defer to military leaders' judgment when it comes to defense issues. The extent of Trump's involvement in developing this policy is unclear, but a Trump administration official did suggest a political motive for the move. This forces Democrats in Rust Belt states like Ohio, Michigan, and Wisconsin to take complete ownership of this issue. The official questioned how blue-collar voters would react when senators come up for re-election and are forced to make their opposition to this a key plank of their campaign. How this will affect the transgender people already serving in the military remains unknown. Up to 10,700 people may already be serving in the U.S. military. Part of the problem is the reassignment surgery, which the military would end up paying for. It can cost upward of $100,000. So there you have it, the Trump tweet of the day. Let's take a look at what else is happening out there. Oh, the new big thing all the billionaires are putting their money into is growing indoors. Now, of course, you know, the hippies did that many years ago when they started growing their marijuana inside hydroponically. But this is something different, and it may have a headline on it here. We'll see. Starting out, Tesla CEO Elon Musk said that Mark Zuckerberg's understanding of artificial intelligence is limited. Uh-oh. The Facebook CEO previously called negative remarks on AI, such as those made by Musk, as pretty irresponsible. Wow. The billionaire boxing match. SoftBank is reportedly interested in a multi-billion-dollar investment in Uber. The Japanese giant, however, is waiting for the company to find new and strong leadership first. Adobe is going to finally phase out Flash, the software millions of people have used to watch videos and play games on the web. The company says the arrival of technologies like HTML5 is the reason why Flash is going away, although it will keep supporting it until 2020. Niantic, the game company behind Pokemon Go, said that the reason why the recent Chicago event didn't go as planned is because of some network providers. Carriers such as Verizon and T-Mobile, however, said they weren't responsible. We didn't do it. A U.S. District Court judge ruled that Apple will have to pay $506 million in damages for infringing an intellectual property on microprocessors owned by the University of Wisconsin. Somebody's always going after Apple. And because Apple has so much, it seems like they almost always get it. Or maybe they get it because they deserve it. The chips in question are Apple's A7, A8, and A8X, which power the iPhone 5S, iPhone 6, and the iPad Air 2. President Trump claimed in a conversation with Tim Cook, Apple's CEO promised him that he would build 3 big plants in the country. Now, that does sound like something President Trump would say. He would never build just a big plant. He would build a big plant. Chinese manufacturing company Foxconn is expected to make an announcement about building facilities in the U.S. as soon as today, but it's really not clear if the two things are related. A piece of Mac malware has reportedly been spying on hundreds of Mac OS users for years. So-called fruit fly malware was already discovered and patched by Apple earlier this year, but it may have impacted up to 400 individuals taking webcam photos and screenshots of their screens. Uh-oh. Deliveroo, the food delivery service out of the UK, claims that it has started using an algorithm that allows it to cut delivery times by approximately 20%. The algorithm, named Frank, I'm being completely frank with you, that's the name of the algorithm, brought down the company's average delivery time to 29 minutes. But Uber Eats still claims that it can do it in 28 minutes. Wow. They're really whacking dominoes that promises to get you that pizza in 30 minutes or less. Okay. Uber is implementing 3 new policies that the company describes as driver-friendly. It will speed up review times for driver's license registration, protect ratings against things the driver can't control, and add the ability to adjust fares right in the app. And it just crossed my mind that I had not checked to see if John was online yet, and he absolutely is. Forgot he's got a headset. So John, I think you need to unmute yourself on your end so that I can see your microphone, and then I'll be able to unmute you on this end. Okay? Sorry I didn't notice you there sooner. You've probably been hanging out for a while. Google is adding SOS alerts in search and maps to give users quick information in case of a crisis. Users will be able to see things such as updates from authorities, news articles, emergency telephone numbers, and other useful information all in one place. Pretty clever, pretty smart. All right, those are the headlines for the day. Hey John, if you're there, I need you to unmute your mic on your end. Can you do that? Let me send him a chat message. Again, Wayne Jett will be joining us at the top of the hour. John not getting my message, it doesn't look like. Okay, let's go to our good word for the day. And maybe he'll pop on after that. Now we'll call him up. Did you ever want to just feel free? Be free? God wants you to be free. Proverbs 14:12 says, "There's a way that seems right, but its end is death." Ever notice how zookeepers handle an injured animal? Even though the keeper is only interested in helping, the animal doesn't understand because it is focused solely on the pain. As a result, it strikes out at the very one who's trying to help. Is that what's happening in your life right now? Perhaps people who call themselves Christians have hurt you. You didn't expect them to be the ones inflicting the pain. You may have been hurt to the extent that you no longer trust anybody. Maybe not even God. You haven't actually said, Lord, I don't trust you. But your actions speak louder than your words. You avoid reading His Word to find an answer. You don't pray. You don't allow anyone to pray for you or with you. You try to bury yourself in your job. You move from one relationship to another. Busy, busy, busy. Alcohol, mood-altering chemicals. You spend hours watching the boob tube, surfing the net, and some of the things you're watching, well, violate your conscience and leave you feeling worse. I'm aware of that. So what's the answer? How do we set ourselves free? How do we allow God to set us free? Well, step one, turn to God. Give Him all your worries and cares, for He cares about you. 1 Peter 5:7. Give Him your pain. Give Him your failures. Give Him your hang-ups. Give Him your challenges. Number 2, forgive whoever it is that hurt you. Obsessing over what they did and trying to make them pay just keeps you chained to them. But forgiveness breaks the chain and sets you free. In your own strength, you may be able to do something to alleviate your pain. But God can destroy the root of the pain and cause you to walk victoriously into the future. So if you want to be set free, turn to God, give Him your troubles, for He cares about you, the pain, the failures, the hang-ups, and the challenges, and then forgive whoever's hurt you, whoever it is, whatever they've done. Stop obsessing about what they did. Stop trying to make them pay. That keeps you prisoner, not them. You're hurting yourself, not them. You're the prisoner, not them. Forgiveness breaks the chain and sets you free. What happens with them? Well, that's up to them, just as it's up to you. In your own strength, you may be able to do something to alleviate the pain, to distract yourself, but ultimately, God can destroy the root of the pain. Not the symptom, but the actual root of the pain, and cause you to walk victoriously into the future. And you'll be free. That's our good word for the day. All right, let me see if I can rouse Tim and get him off mute. Hang on just one second. John, I see you logged in, but I think your microphone might be on mute.
No, the problem is I'm just bringing my system up. I had a bit of just had a shutdown. I had an outage just a minute ago. And I've got one internet backup, which is the one connected to you, but I haven't enabled it yet because I'm just getting the screens up right now.
Okay. All right.
So
well,
I'm ready to come on in probably a minute, in another minute.
Okay. I'll just keep an eye out for your little microphone to light up.
Oh, okay. Fantastic.
Okay.
All right. Thanks.
He too is having some difficulties, but he just rebooted and his system's up, and he should be with us here in just a minute. So, okay. For those of you who would like to take a screenshot of last night's Concierge Trade Alerts, let me drag that over, give you an opportunity to do that. Now, if you're logged in through the GoToWebinar, not through YouTube, but on the GoToWebinar, that little device up at the top that looks like a camera is, and if you click it, it will save a screenshot to your desktop. Okay? Alright. Now there's going to be a whole lot to talk about as far as the S&P goes. We were looking, now yesterday we had a really nice move, okay, by 24.72, ran up 6.25 points. We had a couple of $1,000 moves yesterday. We had a $1,000 move in bonds, I believe it was, a $1,000 move in crude. We had a number of very good moves today. Well, we were looking to be buyers based on the email last night at 24.82. We got no trigger. We were looking to be sellers at 72. We triggered it enough just to aggravate you, is what it amounts to. And it happened right here. The alerts went out at 7:15. So that's going to be 12 and 7, 19. So 1930. Right there. 1930. Okay. Okay. 24.72. Right there. Swing low. 24.72. So if you had your DOM set up to sell 24.72 on a stop, you got triggered in. On a stop limit, let Michael teach you how to do that in the live training room, or call Bert, then perhaps you weren't triggered in. And this is the tiny little range we find ourselves in since the show opened yesterday. Alright, I see John's a mic. Let's open it up, bring him on. John, welcome to the show.
Hi there. How you doing?
Good. Internet outage on your end, eh?
Yeah, a little bit. I actually, I talked to somebody who's in the internet business yesterday, and he didn't seem to think there was any big outage. You know, maybe he's up in the north part of this country, northwest, up in Washington, but he didn't seem to know too.
Yeah, no, up north there wasn't. But yeah. Remember yesterday I showed you the map from Cox Communications with the big with the big red dot on it. Yeah.
Was that specific to Cox, or was that everybody?
That was specific to, well, as far as I know, it was specific to Cox.
Yeah. Okay. Yeah. Actually, you know what, I was reminded of the conversation we had with Ed, what was about 6 weeks ago, about the oil, 6 or 8 weeks ago.
Could be, yeah.
When we predicted a big recovery in the price of oil, and we also talked about increasing inventory drawdowns, massive ones, pretty big ones. Last night, the API came out with a more than 10 million drawdown. It wasn't as bad as that today. It came in around 5 million, something like that. But it's really amazing. We've had almost cumulatively in the last 5 weeks. Nobody's paying attention to this, but you heard it here first. You've got a kind of a record drawdown in oil, actually, and cumulatively over the last 5 weeks is probably approaching 30 million barrels of oil now, maybe more. I haven't done the math yet, but it's just on just appears to be that way, and it looks like it's going to continue because somebody must have finally gotten the bright idea that if you've got a kind of a surplus building here in the U.S., it might be smart not to import so much oil. In fact, I can't believe they didn't do it sooner, because not importing a whole bunch of oil saves a lot of money going overseas. It keeps the economy here, keeps the money here in the economy, and actually that's a kind of a way where you could theoretically, especially with the cuts going on now with OPEC and an additional million cuts from the Saudis, the market's going to get tight around the world, and so if they taper off the imports, you could actually theoretically get the price of oil back to $100 plus, which would be great for Trump because the higher the prices domestically, you could certainly get a few more million barrels going, on the upside, domestically produced between now and 2020. That's not necessarily going to save the world because considerable tightness could come into the market by 2020, as we've talked about on this show. We could actually be in a deficit situation by 2020 because of this global expansion that's going on, and what we were talking about yesterday, which is, if the economy really rocks. Just one second.
Sure, go ahead.
It's okay. It must have been a wrong number or something.
Okay.
I didn't recognize the number. I think the outlook for oil actually just turned pretty positive. And if you look at the structure, if you go, can you go to a daily chart there?
On crude oil?
Yeah.
Yeah, sure. Let me see what I got here that I can utilize.
We actually
I'll take this one and I'll put it on daily.
Can you squeeze it up a bit so we can see a bit, or can you put a weekly up, or?
Oh yeah. Hang on.
There you go.
It's situated here. Hang on. No, that's not it. Okay, I think we can use this one. Okay.
Okay.
So
Is that the way?
Now,
okay.
That's not a continuous chart. That is, I can put it on a continuous if you want.
No, that's okay. That's okay. Listen, do you see the way we made the lows? Well, of course, the real lows. Wait a minute. Is that a daily chart?
This is a daily chart of crude
Yeah. No.
oil.
Can you put a weekly up then?
Weekly.
Well, yeah. Actually, before you take that off, let's just look at this chart, because actually it is a little bit of a. Right now, we've kind of got a three-wave rally off the lows here, off the most recent low at 42. So, if we did turn down from here, that would not be good. It might mean we're going to go down and test 42 one more time, which, you can't rule out. But if you go to the weekly, you sort of see a bit of a different picture.
Okay. We'll go to a weekly. Okay. There's weekly.
Yeah. Now you see the big lows at 27 that we put in, and then we had this big rally up, and then we've had this pullback. It's sort of starting to look like a kind of a cup and handle, developing cup and handle situation, where if we did break 48 and started going up to 51, right up to 54, you know, I think you could have you could probably get up to 60 or even 70 on this next run. And it could still be a bear market in the sense that, you know, because we've had the extreme lows and then we've been in this trading band between sort of 42 to 54. And we're right in the middle of it at the moment. If we were to break out to the upside, you really could get you could get a measured move, actually up to about $70 on the oil.
Yeah, from the low that we put in back February 12th, down at 2605, up to this little double top that we put in, up around 55, 20, yeah, we'll call it $55. This one's 55.03, and this is 55.24. So we'll just call it at 50. We'll call it $55. We've had a 38% retracement. Well, we had a 24% retracement and a bounce. Then we got a 38 and a bounce, and now we're back to the 38% retracement, and it's attempting to bounce again. But it certainly wouldn't take much for this thing to turn back down.
Right,
frankly,
right.
And go down and maybe potentially give us a double bottom here at this 50% retracement.
Yeah, yeah.
It could even test this 62.
Yeah, yeah.
What are your thoughts? Are we moving higher or lower?
Well, it depends on you know. I would say I think we're going to trend higher, but 50, getting above 50 may be a problem. And you know, in spite of the very dramatic cumulative drawdowns, you know, there's something that could potentially you know, cause a bit of a pullback. It seems to be happening that every time this thing looks like it's ready to go, it has a habit of pulling back. So, you know, it could potentially do something similar, you know. So but the rest of the market's doing pretty well. We actually called you know, I went through some charts this morning ahead of the open, and we put some buy stops just on the semiconductors, and the semiconductors took off this morning with, you know, very dramatically. They've subsequently run into trouble. We actually sold Nvidia right at the high. It made a kind of a double top actually, around 169.70 or something. We sold almost the exact high on Nvidia. And we've been short all the way down to where we are right now. Of course, there's probably a risk of some sort of a pullback when the Fed comes out. See, the bonds are going down again. You know, it's even if the Fed raises rates, there's a possibility those bonds could fall further. So the banks are not performing that great today, considering the bonds are going down. And one of the more notable things is since you know, getting crushed a few weeks ago on this Amazon takeover of Whole Foods, and Walmart's been performing pretty well. It's actually acting very, very bullish right now, Walmart. And I think it's kind of like McDonald's, you know, Walmart's sign of the times. People go where they can get the best bang for their buck, you know. Somebody showed a chart of, you look at Chipotle, Mexican Grill, CMG, and McDonald's, you know, they're like diametrically opposed. which tells me that the Main Street is still hurting quite a bit, from the Obama nightmare of the last 8 years. So it hasn't the Trump bull market in stocks hasn't filtered down to Main Street yet, but it's coming, hopefully, and it really might. The more Main Street benefits in the next year or so, the better it's going to be for Trump. And obviously, it's going to be very, very interesting to see if we actually, sometime in the next year or so, we hit. I mean, here we are. Where are we now? July. So we got about one year and 3 months before the next election. It's going to be interesting if the economy could be hitting a sweet spot. Probably will be by November of next year. And if it is, I think the Republicans will not only be fairly safe in the 2018s, but they might actually carry a lot more seats. So that's going to be a very interesting. It's going to be completely a departure from almost every previous midterm election. And I think if that happens, Trump will be hailed as somewhat heroic if he's able to pull that off. And as long as he keeps the pedal to the metal, he probably will be able to. So it's one of the things that to be careful of today. By the way, we sold actually sold the mid cap yesterday, the EMD, at I think it was 95, maybe it was more. Yeah, no, it was about 90, somewhere around 95, 1795, almost the exact high, and we've essentially been short ever since. We're still short right now, and it's very dangerous. You've got to be very, very careful when this thing does this. When it goes down like this, and remember, there's this. In fact, there's a chart floating around showing the mid cap as peaking out around July 20th. Well, it looks like it got a last wind, had this big rally yesterday, and definitely looks like it's peaked out for the time being after this run up yesterday. So I'd be extremely careful of this mid cap from here on out. And actually, I can tell you that the last time when that NVIDIA got up to, which is one of the reasons why we sold it and shorted it this morning, last time NVIDIA got up to 169, we had that real route that took it down to below 140. It took it down to 143 the first time. We bought it. It went back up to about 153. We sold it again, went back down to 140, back up again, and now it's sort of worked its way back up to new highs, and now it's selling off. But when it's selling off and the mid cap is dropping like this, you've got to be very, very careful, because if somebody comes in and whacks this thing, suddenly it drops down to 164 or something like that, they could really take it apart. And they tend to do that when it gets stretched. And the last time this short guy Citron came out and said he was short and was bad mouthing the stock and saying it was gonna, it was no business being at 169. So
who is this
you have
now?
to be very careful that the same sort of thing doesn't happen here right now, because if it does, I think it'll take this market apart.
Who was
notwithstanding
it that said
Citron,
Okay.
Citron Research. They're a kind of a short seller.
Oh,
and
gotcha. I know they are.
and the other one is Muddy Waters, notorious for doing these kinds of things. So have to be extremely careful, because we have had a great run up, but when you start seeing stuff like this happen, and also the drug stocks actually look kind of poised for another drop, especially Amgen. Actually, we sold Amgen yesterday near the highs, and it had a pretty big sell-off today. We also got lucky and we sold Ulta yesterday, ULTA, and that had a pretty big fall. So and we also went long iRobot this morning, right just at the open actually, and it's gone up about $5 from the open. And we also went into TTPH, but unfortunately I couldn't time it. I just put a buyout, and it wasn't a very good idea to start with, but it kind of came back pretty strong. And actually I think TTPH could be a pretty big winner if it goes to a new high today. That would be a pretty big deal. I haven't actually checked it in the last few minutes, but other things are acting really well. I mean, you know, the Netflix was such an incredible result that it's still pushing new highs right now, and Amazon also. And by the way, we've been short Google all the way down to where we are right now. But if the market starts rallying this afternoon on the Fed, I think you'd probably want to cover Google and maybe go back long again. Maybe it might be done going down. And look, I noticed a lot of these stocks, they're not, you know, when they drop, they tend to come back pretty quickly. So the TTPH, look at the way it's recovered. It's that's very rare to see that happen, and it tends to imply that if we get back up above 88, 70 or 9, it could really go for a run, and it's probably overdue because it was a very valuable stock a year or so ago or more, and it got whacked down it got beaten down to almost nothing, and it's obviously come back pretty strong. And incidentally, the metals are, you know, they didn't want to give up much ground last night. When you see them rallying like this, you know, an hour before the Fed, it kind of means, it usually means they're going to, it's going to go higher, at least into the Fed. And we have to be careful of that, because sometimes when it rallies into the Fed, not always, it can just go straight up. But the last time it rallied into the Fed, it sold off. So, you know, it's but the metals are acting very, very impressively right now. And I think the dollar is actually starting to weaken again as well.
It was rallying a little bit earlier as we moved into the Fed. Yeah, and we've still got what do we got? An hour. We still got an hour to the announcement. Yeah. Do you think they're going to raise rates today or not?
Well, you can't rule it out, you know, and I think they do raise rates. It's going to be interesting to see what happens with the bonds. You know, if they get whacked, you know, if we suddenly went limit down or something on the bonds, that would be epic. You know, that would be, and actually could be, if something like that happened, and the markets, you know, sort of got the bull signal, you could actually you could possibly see a very big rally in stocks develop off something like that, in spite of the, you know, the kind of pause that we're in right now. So the other thing that went pretty well was very difficult bottom to pick yesterday on the coffee, but we took a shot at it. And the markets recovered really dramatically today, right back up to 134.5. So this is another day where you probably want to be long the coffee going into the close, just in case something happens in the south, you know, south of the equator, where somebody gets frost or something like that, and it damages the crop. The sugar also rebounded a little bit today, and it might be ready for another move to the upside. And also the OJ's recovered. It had a bit of a pullback, and it's heading back up again now. So one of the things, you know, this business with Sessions, where Trump is sort of calling him out. He's trying to send Sessions a signal to basically fire. I think he's trying to get Sessions to fire the special counsel, and you know, without actually talking to him. In other words, if Sessions decides to, you know, win one for the Gipper,
right,
and actually did that would be, you know, he could recuse himself, and he could technically fire the guy. because by the way, apparently he is starting to investigate all these leaks, and they're really, really going to go seriously after everybody now. And it's absolutely right. I said it months ago. Why should Trump take all the heat, and all this nonsense about Russia? He should be going after Hillary and everybody else, because the only way to get the Democrats off your back is to threaten Hillary with jail. And I think they're going to come begging for a pardon, and maybe then everybody can live happily ever after. But, you got to fight fire with fire.
I just noticed it's 10 after. Let's welcome Wayne Jett to the show. Wayne, welcome to the show.
Thanks a lot.
Hey.
Enjoyed listening in a little bit here.
Yeah, I just sent you an email because I looked in the wrong place on my screen. I didn't see it. So just ignore the email I sent. But anyway, glad to have you with us. Ladies and gentlemen, Wayne Jett is the author of the book, The Fruits of Graft, Great Depressions, Then and Now. His website is classicalcapital.com. And what are your thoughts on what John was just talking about?
Well, it's interesting that on this matter of what the Attorney General might do in regard to Special Prosecutor Mueller, or Mueller, whatever you want to call him, I had sent a tweet myself to the President the other night, and I think to the Attorney General as well, saying that the Attorney General ought to proceed to dismiss the so-called special prosecutor for number one, for overreaching his appointment, and specifically I suggested that as what the Attorney General should do, because what the special prosecutor is doing is clearly going outside the area within which the Attorney General had originally recused himself. And specifically, to nail that down, the original written recusal filed by the Attorney General said that he was excusing himself from the investigation of matters relating to the campaign, the presidential campaign.
Mm-hmm.
And what had happened in the days before that, or just recently, is that clearly the special prosecutor is now investigating all business transactions of Trump and the Trump organization. Now this is clearly ranging far afield from what was originally the basis for the recusal, which is really broader than it needed to be. It was only a matter of allegations about the campaign and the Russian government, whether there was any collusion at all between that, and even that was a stretch and has completely evaporated. And now we have a special prosecutor who was given a broader scope of authority in the first place by this assistant or deputy attorney general, who is an Obama holdover, and so was broadening and appointing this special prosecutor as soon as Comey had illegally, feloniously leaked the so-called memo to the press out of the FBI files. So we have all of these criminal activities leading up to the situation we have presently, in which we have a special prosecutor with, I think he's got something like a dozen or more high-powered lawyers already hired on his staff, all of them looking into all kinds of whatever they can come up with, when the only area in which the Attorney General recused himself and therefore left the power of authority to his deputy Attorney General, an Obama holdover, was just the area of campaign investigations relating to the Russian government. So when the special prosecutor has exceeded all of that by far, number one, Jeff Sessions ought to say, I never said that I was going to authorize a special prosecutor or allow anyone else to appoint one on matters outside the area of simply the campaign. And so therefore, I'm moving back into the area that has been usurped from me by the deputy, number one, and by the special prosecutor now. They're both fired. That's what ought to happen. I suggested that it's been 2 or 3 days ago now, but I noticed just today that the president has tweeted that the Attorney General Sessions ought to fire the assistant director of the FBI. Well,
that would be a good move.
that was an area in which the president himself could operate. He could certainly fire the Attorney General. He can certainly fire the Deputy Attorney General, especially in the situation in which the Deputy Attorney General had been in the situation of, what was it? It was a deal in which he was directly going against the president. And, it was, he had originally recommended a firing, and that is he had recommended that Comey be fired, and then he came back and went back the other direction on that. I mean, there's plenty of reason for Trump to fire him, and it's certainly a matter that the president is not without authority to fire a deputy, just as easily as he can fire the Attorney General himself. So anyway, that's enough said on that. But I've got strong views about that. There's another aspect, apart from that special prosecutor, that appears to me to be even more dangerous. I mean, the special prosecutor has to come up with some hard evidence before doing anything, supposedly. But yet there's something that's happening in the House and Senate right now that is much more dangerous. I don't know whether you've already talked about it before, but there's a so-called Iranian sanctions bill against Iran. It's really against Russia, and it amounts in effect to what I've heard, the analysis I've heard of it. I haven't seen the bill itself, but it takes absolutely warlike measures against Russia particularly, and would amount, I've heard it said by others, that it would amount to a legislative declaration of war, because it is requiring very significant sanctions of various kinds against Russia, including, as best I understand the reports, actions against its pipelines, actions against its railroads. I mean, you're talking about taking down and possibly by warlike measures, destroying infrastructure of the Russian nation. So, and what's worse is that it's practically passed unanimously in both houses, and the White House is indicating the president's going to sign it. I can't imagine that's going to happen, but that's the reports I'm seeing this morning.
So what do you
Nothing
think
about that?
What do you think about that, John?
Have you heard anything about that?
John, any thoughts on that? I hadn't heard of it.
Well, it's there, and it's very serious. It is getting attention. I haven't watched the mainstream media. I mean, what good would that be anyway? But it certainly is getting. It's certainly getting attention on the alternative media in the web. So, just another day in the life of Americans under the U.S. government. So I'll change gears for just a minute if you wish me to do so.
Yeah, go ahead. What do you got on your mind today?
Well, I think it's worth mentioning that after some, I think maybe even a couple of months, I wrote another piece on my website, and I did so because
I was just looking at that.
It just brings into focus just how serious a problem we have in the complete mismatch, the complete outrageous circumstance that we have with a hidden government that no one gets a chance to really see, but puts us into these messes that we have been in. And that's as kind a word as I can possibly come up with. Time after time after time, not just in my lifetime, but before I was born. Certainly during the Great Depression is the piece I wrote about this past week. And actually, I guess it was this week, Monday. And I have titled that carefully, not for the purpose of shock or anything of the sort. It is to call it what it was. A new term that I've seen used only recently, but one that seems to be entirely fitting. When I first saw that term used, it's auto-genocide. It was used the first time I had seen it in regard to the Civil War of the United States, of the war between the states, whatever you want to call it, in the United States. That the war was conducted in such a way as to amount to auto-genocide of the same nature as Pol Pot's murdering of a large section of the Cambodian population after the Vietnam War. In Cambodia, it was done largely by requiring Cambodians to kneel down, put their head on the ground in front of them, and the back of their skulls would be caved in with short hoes. In other words, tools of the field would bash in the back of their heads, and they would be left dead there. That was done to hundreds of thousands of Cambodians. That was auto-genocide as described by Dr. Steve Pachenik, the man I've mentioned before, PhD in psychiatry and medicine. I'm sorry, that in foreign affairs is his PhD, and he has an MD, a doctor of psychiatry in psychiatry from Harvard. The PhD is from MIT. Long-term servant of the deep state, the CIA, the Secretary of State's office, and so forth in our foreign affairs. He used that term in describing Cambodia and also the Civil War. The Civil War, because so many thousands of soldiers' lives were taken by throwing them into battles in which they couldn't possibly come out alive, and for not necessarily great consequences at all in terms of the field of battle. And the same I've applied in our discussions regarding the events of World War I and World War II, which were pursued after such institutions as the Carnegie Endowment for International Peace had concluded that the best way to shape the thoughts and requirements and laws of nations is to put that nation under a condition of war. And after that was concluded in the first decade of the 20th century, the second decade had tens of millions of lives taken on the field of battle in exactly the kind of combat that was designed to take as many lives as possible and as quickly as possible, particularly of young men of the age of producing and raising families. Much the same vein as the World War II. Both 1 and 2 were wars that hardly rearranged the chairs on the deck as far as the nations of Europe and the world were concerned, but eliminated millions of lives, which is one of the primary motivations of the ruling elite, as announced in 1901 by H.G. Wells in his manifesto describing the ways in which the people of the abyss ought to be eliminated by the year 2000. So here we are again, and what I have done is this Monday I published a short piece in which I used the same term, and I think entirely appropriately so, to the actions taken by the federal government of the United States during the Great Depression to not only impoverish the middle class, to stunt its growth, to set it back, to turn it around and try to diminish and destroy the middle class. It specifically was designed to starve to death millions of Americans, and succeeded in doing so. I think that qualifies under the term and usage of autogenocide, which means a preconceived plan set in motion to target and kill a targeted population, or at least a significant part of it. And I think that's what amounted to the Great Depression. I know that with your audience, I've engaged in commenting on various things, as I have today, on current events. And I do so to the best of my ability. In terms of my expertise and why I'm commenting about this thing, I've done research and I've written specifically on the subject of the Great Depression and the actions that were in fact taken, that any reasonable person with any understanding at all of economics would understand, would have a completely destructive effect on the prosperity, on the livelihood, on the ability to survive of the population that is subjected to these actions. And I've identified those actions very briefly in the brief article that I wrote. I don't know that I need to go through them again here, but depending on the amount of time we have, I'd be glad to discuss any of that to any extent you wish.
What was it that first brought this to your attention? What led you down the path of research, so to speak, as far as the Depression and all that happened?
It was my work in the financial sector.
Okay.
After I had stopped practicing law, I had been studying classical economic theory and had written a paper or two on the subject. Particularly the one was a paper noting that the proposed Kennedy tax cuts by President Kennedy in the early 1960s, the manner in which he had arrived at a conclusion to propose tax cuts as a way of getting the economy going again, something that, by the way, Eisenhower had failed to deliver on the 2 terms he was president, even though he ran his first term on the basis of a tax cut. He never did it. So Kennedy had been advised by 2 different factions of the 2 parties to refrain from tax cuts and to do various other things, but one particular economist on the staff of, I think, the World Bank, a Canadian economist, had recommended, had been asked to evaluate that as his first job after getting his PhD. His name was Robert Mundell, and he was, I believe, he was with the World Bank at that time. He later went to the University of Chicago, and then subsequently moved to Columbia University, where he still has a professorship. It largely stemmed his success as in the economic field, largely stemmed from his success in writing the evaluation of the plans presented to Kennedy. His analysis was that neither plan would work, but that if he proposed tax cuts, it would get the economy going, much as, of course, I've mentioned that way back in '39, Henry Morgenthau, the Secretary of Treasury, had advised FDR that he could have a boom within a month if he would do across-the-board tax cuts from the tremendous levels they were.
Right.
Mundell recommended tax cuts to Kennedy. Kennedy proposed them, despite his parties. In fact, the 2 parties were not particularly enamored. They didn't do anything with it until after he was murdered. And then with LBJ in the chair, they went ahead and did the tax cuts, or some tax cuts, and got some economic expansion going. That was one item, and then we had more of it under Reagan, both having success in economic expansion on that basis, which is not particularly surprising to a lot of people, but certainly it was against the powers that be. The establishment always wants higher taxes because the taxes are basically, they target the middle class, the people who earn income, and that's the target.
You know, I totally agree with you. What people don't understand is if this tax cut that Trump's putting into place turns out to be as big as we're expecting, the implications, especially if it was backdated, you know, and it probably will be backdated, possibly to January, and that would be a massive windfall and would stimulate the economy very, very dramatically. But on top of that, I'm calling it a trifecta, you know, the sort of growth trifecta, because you've got the tax cuts, you've got the repatriation of several $1 trillion, and on top of that, the infrastructure, $1 trillion infrastructure. This economy will absolutely roar if that happens, and I think they need to do it. You know, they absolutely have to do it.
I couldn't agree with you more, but the problem, as I think you were maybe off the line with us for a little while, and during that time I was talking about this sanctions bill supposedly against Iran, but it's against Russia, and it amounts to a declaration of war. And it's absolutely astonishing that it appears that it has practically unanimous vote in both houses.
Yeah, I saw that. Yeah.
And the White House indicating it's going to sign it. At the same time, we have, the meeting of the elite deep dark state, whatever you want to call it, shadow government. Brennan, who is the former CIA director fired by Trump, still is reportedly running the dark state.
He's a very bad guy, this fellow, I'll tell you.
And at Aspen, basically said there's going to, that there will be action taken to remove him from power, essentially announcing or calling a coup that
you should be arrested. You should be arrested for treason for saying stuff like that.
Somebody in the right is going to have to start moving on these things, and it frankly needs to be centered around the Attorney General and the FBI. But the Democrats and the establishment Republicans are preventing the new FBI director from taking charge. The Obama robot at the deputy level, who took the $700,000 or so for his wife's so-called assembly campaign in Virginia. Yeah. It's absolutely. This is a so-called government servant, FBI career guy, who has a Porsche in the driveway. These kinds of things are out of hand, and I'll tell you, if the dark side gets the upper hand again, it's going to be like, we've had some pretty gruesome things before, but so far they've kept the Gestapo out of the streets mostly. But it's a very dangerous time, and I don't think we can start counting on having either a tax cut or a continued success in trying to recover the economy that, at least is within our prospects within the last few months.
Well, we'll see, it's debatable as to how much more this market has on the upside as well, because everything's kind of happening the way we expected, which was that we'd get an acceleration here in the last month before my potential top around the 21st of August, or the middle of the 21st of August. And, if anything like what you're saying actually happens, it might result in a very sharp correction of several thousand points, Dow points, which can't be ruled out. Certainly, I think 1,000 Dow points could happen, in a heartbeat. If there's a reason for it. There hasn't been a reason for it yet, but
well, if I might suggest, my view basically is that the reason for it is the overall reason is that it's a fake market. In fact, I actually sent another one of my little tweets to the president this morning, saying that asking, please unrig the prices of gold and silver. Please unrig the prices of stocks and the trading and the interest rate rigging, up and down one side and the other. Everything is a complete facade of the real circumstance, and you pull any one of those things out, and it's possible to have the house coming down, but they just have had such unbridled power to do anything they want, and the mainstream press and the financial press is eagerly willing to go right along with it to suggest, oh, well, this is all normal, all the up and up. And yet they know every interest rate, starting with the funds rate, is completely rigged and for purposes and done by means other than what's actually said. So when's it going to pop? any minute, or I guess as long as they're able to continue in power.
Hello.
Yeah,
Good,
yeah.
how are you?
Look, the the gold. I think the gold is
Well, I look forward to
sort of
seeing
being
you again, I
unshackled just by virtue of the fact that the dollar is in a decline, and just from a cyclical standpoint, and that is likely to continue. And so the gold is very interesting, because if you actually look at things right today, you know, we had another test on this nugget yesterday, just below 30, and we're already at 31. we basically bought it yesterday afternoon in anticipation of it rallying today. And even though the gold went down overnight, the gold stocks didn't give up any ground. And Newmont has exploded to the upside in the last couple of days. The price, the copper has gone through the roof. And it honestly looks to me like we're in for a massive move upwards. I tell you, there's going to be a move in gold that'll shock the world. It's going to shock the world in the next few years, where gold will go. And I think Trump probably will unshackle the gold, you know, so that it's not manipulated anymore. And we may already be seeing the first signs of it. I want to tell you something really interesting. I mentioned this on the show before, but it's a little bit hard to get your arms around. But, you know, we've had record short interest before this bull market began, or as this bull market was beginning. We had all-time record short interest on Wall Street, but we didn't get record short interest in 2000, or we were at record levels in 2009 at the bottom, but we didn't hit the all-time record short interest until 2011. So you have to ask yourself, how did the market rally, you know, for like 2 years, and yet the shorts were still piling on more shorts? You know, they were increasing their short positions all the way up. And, you know, one of those guys was the fellow from Facebook, you know, who founded Facebook, and he basically blew $7 billion trying to short the market on the way up, and he was wrong. You're
talking about Zuckerberg?
No. The fellow Thiel, Peter Thiel.
Gotcha.
Yeah, and the silver situation right now is identical. So we had you remember we had that sort of crash in 2011. That was when the short interest peaked at the all-time record short level. And that was the fuel that caused the next bull market, you know, 12, 13, 14, the sweet spot of the bull market, when the Fed was pulling out all the stops and all the QEs, right? Well, here we are today, identical situation, about 1.5 years off the bottom in silver. And it was the silver the commercials weren't you know, at record short positions when it was at 14 at the bottom. They've been at record short positions in the last few months, as silver has been declining from sort of 19 down to 16 or 15.5, right? Well, guess what happened in the last couple of weeks? They are covering their shorts like crazy. So the commercials, the short position has peaked. And this looks like an identical situation now, where for the next few years, you could have a massive bull market in silver and gold, because the commercials are basically going long here. They're covering their shorts, and look, they're probably going to get caught in a short squeeze of monumental proportions by, you know, possibly for the things that Wayne has just mentioned this morning. You know, about this situation with Russia worsening. Who wouldn't like that anymore? I mean, look, it may not come to anything, but from a Putin standpoint, it's exactly what Russia wants, because they've been buying so much gold. They're buying 1 million ounces of gold every month. And so, you know, the price of gold goes up. It's great for Russia. And it's great for China.
Well, I'll tell you, yet as of this morning, we're coming down to the end of another month. And so I guess we have options expiring sometime pretty soon. And we have silver what, at 1650 or under?
Right about there right now, just a little bit under 46 right now, and but there is a options thing happening, and I think once that's out of the way, silver could really move higher quickly, rapidly.
Yeah, well, what we need, in my humble opinion, is we need an immediate order of the CFTC that no options contract are permitted under penalties of felony by any person unable to deliver the metal on the terms of the contract. That is, if you're buying an option, you must have the capability to deliver the metal at the end of the term. And you know, this stuff of setting the prices on a completely fictitious paper market is just beyond the pale. And of course, I'm preaching to the choir with.
No, you're dead right. That would put the cat amongst the pigeons in a nanosecond. That would absolutely blow the market apart.
Well, that's exactly what we need. And why would it blow it apart? Because the prices now are completely fake.
Yeah,
that's why they're using those things completely for that purpose. Simply manipulation, no other purpose.
Yeah,
in my humble opinion. So.
No, these banks, listen, since the gold hit 1900, these banks have been absolutely ripping everybody off for the last 5 or 6 years, while they've been manipulating the gold down, and they've hurt the market, they hurt the industry real bad, you know. But on the positive side, you know, because of the price being down to where it got to, just like the oil, the capital investment in the future, the mines, I mean, it is a stated fact that apparently over the next 7 years, the output of gold is going to fall by 50%. And as you know, you just can't click your fingers and turn on a gold mine overnight. It takes about 10 years to put a gold. So this is absolutely built in. There's no way out of it. You know, the market's going to get tighter because, look, they're putting 30, you know, probably $30 trillion are being pumped into the world economies. You know, the Chinese are getting richer every day. They're absolutely obsessed with gold. The Indians are obsessed with gold, and the world is going to be buying. Now, you know, there's no drama in the world at the moment, but if some drama develops and everybody starts trying to buy gold at the same time, then there's going to be an upsurge of monumental proportions, and a day like that could come right out of the blue. You know, this guy in Korea I mean, it's amazing that they haven't taken him out yet, because you know, he's got to be stopped. I mean, listen, I mean, when are they going to get the memo? It's kind of like Hitler. He's got a bigger army than Hitler had. Do you realize that? I mean, he's got a 1 million man army, this guy.
Well, I think I'm not an expert on Korea, but there is a much different circumstance there in terms of our relations with that country and with Japan than meets the public eye, I believe. There's a different relationship between North Korea and Japan than what we are led to believe. And there are reports that the two Koreas are very much of a mind that it's time to reunite them and to have a different relationship with Japan and with China. And there's no reason it should not be, except for a completely contrived arrangement by which a renegade government is needed for purposes of various interests of international relations. And so one has been created there in North Korea. So we'll see what happens. My last point on this thing of the manipulation of all these rigged prices. I mean, the central point of laws enacted to prevent market manipulation has been to prevent those capable of manipulating the markets, of controlling the markets, from doing it. And yet the law is being applied in exactly the opposite way. They will nail any little person who can't possibly corner the market and yet all the big guys who can get a completely free ride as if they are the government itself doing it. And perhaps they are. But from someone who's labored in the minds of the federal courts for quite a few years, I mean, it really is reprehensible to me that is the state of our legal affairs and our courts, our laws, our Congress. The whole thing is a sordid mess. Maybe it's called a swamp, but boy, we sure need to change some of the animals in it for sure, I think. Okay. I'll let you have a chance to get a breath in.
Anything you want to add to that, John?
Well, only that the metals are breaking out. I think somebody's leaked the news out of the Fed 10 minutes ahead of the market, because it just suddenly shot up. The gold just took off here, and the market, the Nasdaq at least, is starting to go up. The rest of the market's still a little bit subdued, but maybe I guess if they're not going to raise rates, it's probably going to be well received.
Well, the Fed has said they were going to be very aggressive, but
the bonds just jumped up to 50 to half a point.
Yep. So we've got that coming out in 11 minutes. So I'm sure most of the audience wants to be able to pay attention to that. Anything else you want to add today, Wayne?
No. Thanks very much for the invite, and good to talk to you, Wayne. As always, it's a pleasure.
Well, my pleasure. I appreciate it. I wasn't aware of the move in copper, and it's interesting to see or learn of those things to look at. I don't follow it that closely, but nevertheless, everything I see is pretty deplorable in terms of the way the manipulators have their way. So I don't have a whole lot more to add to our discussion, unless you have something that you'd like to talk about, Dwayne.
No, we're just about out of time here for the day, and I'm going to do a quick recap of the alerts last night. So, John, I guess we'll talk with you tomorrow, and Wayne, we'll look forward to talking to you next Wednesday.
All right. Thanks so much for having me.
All right. Thanks so much, guys.
Likewise. Thanks very much. Okay. All the best.
Have a good day. All right, guys. We got 9-10 minutes here to the Fed announcement. Now, the markets have been incredibly quiet heading into the Fed. The S&P 500, I did it once already, but let me just drag it out one more time. If anybody wants to grab a screenshot. Not a lot of movement today, nothing like what we had yesterday. Yesterday on the S&P, we had a 6.25 point move to the upside. These are still last week's weekly trading zones. Will break out to the general public, to the community at large, this week's zones tomorrow, as we do every Thursday. The weekly trading zones are emailed to the CFRN partners every Monday morning at 6:15 a.m. Eastern, well before Wall Street wakes up for the week. That gives our partners an opportunity to get everything set up on their charts. Different partners set up their charts differently. Some put the zones on the higher time frames and just refer to them. They're not staring at them all day. Because when you get on the smaller time frame on the range chart that we use in the live training room, sometimes the zones don't show up properly, and that just has to do with the way the charts are configured. So whatever markets that you are trading in, having them because once we publish them and you then post them to your chart, they're the same for the entire week. They don't change. And this just goes to show you what the carryover effect of the weekly trading zones is like. Last week, 75.76 was a weekly trading zone, and as you can see, price has spent the last day and a half just oscillating above and below and above and below. Now I suspect that will change here in about 8 minutes when the announcement comes out. I have a phone ringing in the background, but yet it doesn't show up on my screen. That's interesting. Sounds like the Google Hangouts phone, but I don't have that open. Interesting. Okay. All right, let's move through these alerts real quick here, and I'll let you go so you can watch the Fed. All right, on the S&P, we were looking to be long above 2482, did not trigger, or short below 72. Okay, the swing low was exactly 72 on the nose. Okay, so if you had an order in to sell 2472 on a stop, you get triggered. Stop limit, perhaps you don't get triggered. If you don't know how to do a stop limit, give Bert a call, 866-928-3310. Okay, now I went ahead and put this up yesterday. This is a zone from this week, and price has punched through and looks like it wants to pull back, confirm that it can be good support. So we had a 130-point move in the Dow yesterday. Now let's take a look at what we had last night. 1930. Okay, on the Dow, we were looking to be buyers at 21,580. That was in the email that went out last night. That was the screenshot that I just showed you a second ago. 21,580. Okay. Now the swing high so far today has been 687. So that's a 107-point move. So still a nice move in the Dow. Just not in the S&P. The sell side on the Dow last night was 540, and so we have no trigger on the downside. All right, moving on to the Russell, and we're still waiting to see all the volume come back to the Russell that we used to enjoy. Again today, there was 1,000 contracts in that 30-minute period, which, you know, if you're trading intraday in a 30-minute period, there's 940 contracts, there's 1,000, but then it trails off. In the last 30 minutes, we've seen 318. Now, depending upon the number of contracts that you're trading, there's certainly plenty of volume available. But it hasn't returned to the Russell that we once knew and loved. So 1448, the swing low here. Well, the initial swing low actually dropped to 1446.20. Price Important prices, important areas are almost always tested. Price gets back above the trigger, drops again, okay, and the swing low was 1444.90. So if we round that up to 1445, that's 3 points at $50 per point, and so that's $150. If we round it up to 1445, 3 points at $50 per point, it's $150 per point. So $150 per contract available. There we go. That's the ticket. Now, we had wondered if, when the Russell moved back to the CME, if they would restore it to $100 per point, as it used to be, like the, and perhaps once the move is completed, it's a possibility. I haven't read that. We'll have to wait and see. Price gets back above, okay, back above the trigger one more time. Important prices, important areas, almost always tested. And on this final drop, we got down to 1444. That's a $200 per contract move. 4 points, $50 per point, $200 per contract available. Okay, so that takes care of the Russell. Let's go to Crude. We're in the September month now. 1930, right there. The alerts went out at 1915, 7:15 Eastern. And since we're using 30-minute candles, we go down to the 7:30 candle, 1930. Here comes the Fed interest rates, unchanged. Let's see what they got to say.
Policy for now, but hints very strongly that a change is coming soon. The Fed said in its statement that it currently expects to begin implementing a balance sheet normalization program, quote, relatively soon, provided the economy evolves broadly as anticipated. It had previously said that policy was coming this year, so tightening it up to saying it's coming relatively soon. And it said the current reinvestment policy is, quote, for the time being, end quote, only. On rates, the committee expects that economic conditions will evolve in a manner that will warrant gradual increases in the funds rate in the months ahead, and that funds rate will remain below levels expected to prevail in the longer term. It was a unanimous decision, no dissent, as in last month's rate hike. Neil Kashkari, the Minneapolis Fed president, was indeed on board. On the economy, the overall economic outlook, specifically on inflation, it said...
Okay, that pretty much says it all right there. The Fed has left the rate unchanged, and we are looking forward to some aggressive movement in the very near future. We'll see if that holds true. All right. On Crude, last night, email said, consider buying 48.80. Now, 48.80, as you can see, that did not get hit until the announcement came out today. And something that we teach and we feel very strongly about is ahead of a major economic announcement such as this, flat. Anything else, unless you are trained to trade news, then that is nothing more than a gamble. Okay? And we don't gamble, we trade. The difference is when the odds are in your favor. When the odds are in your favor, then it's a business plan, a business strategy, a business decision when you put on or take off a trade. The odds are not in your favor, such as when you go to Vegas. Well, guess what? That's gambling. And that's what will lead you to blowing up your account. We teach extremely aggressive risk management. Extremely. In the live training room, we never risk more than 8 ticks on any one trade. On the Concierge Trade Alerts, which is a different story, because that is what we do in the live training room each day, is rules-based trading. So there is a reason and a rule for each and everything that we do. Discretionary trading, that is the Concierge Trade Alerts, and there we never risk more than $300 per contract. If the trade setup, if the chart tells us that we need to risk more than $300, and the chart will tell you exactly where your stop needs to go. If it requires more than $300 of risk, then you move on to a different market. When you receive your email each night, you get 8 markets, 2 trades per market. It's 16 potential trading opportunities. And as you've seen, important prices, important areas, almost always tested. So there's a lot of opportunity. And so we want to look for the opportunity that provides the most potential for the least amount of risk. Okay. All right. So we triggered on the long side during the Fed announcement. So during the crude inventories here. So we would not take that particular trade for that reason. And also on the short side for crude, which was 48.20. Now that triggered right here, 48.20. Now the chart's going to tell you that your stop needs to be up at 48.60. That's going to be more than the $300 that we're willing to risk on a Concierge Trade Alert. What you then do is you drill down to a smaller time frame, such as a 5-minute, and if you still are not able to find an acceptable entry based upon what you saw in the training videos, then you simply have to be patient and wait for the market to present you with the opportunity you're looking for. Least amount of risk, quite often, almost always, provides the most profit potential. Okay. All right. So there's crude. Really nothing to crow about. The swing low on crude prior to the announcement was 48.04. So it's a 16-cent move at $10 per tick, $160 per contract. Next in line is the NQ. Okay. In 1 second. Okay, on the NQ, let's have a look. See, 1930. Okay. All right, on the NQ, we were looking to be sellers at 59.38. Now, here, let me show you. Okay. 59.38. I'm sorry. Buyer at 59.38. Okay. Back in gear. Yes, Karen, the maximum that we risk is $300 per contract. If you've watched the training videos or watched the recap every day, we go over that with you here on the show. Yes, crude, 30 cents. That's right. That's the most we risk. When you are trading in a discretionary manner and have the opportunity to take $500 to $1,000 out of a lot of trades, you can't do that with an 8-tick risk. I assume you've watched the training videos, correct? You have? Okay, good. Excellent. All right, on the NQ, 59.38. Right here. There's another example of important prices, important areas, almost always tested. So let's do this and do this. 59.38. Okay. Now, when we trigger here, 59.38, if you've watched the training video, you know that your stop loss has to go below the most recent swing low. It's a pretty deep stop, and price didn't go very far. However, on this trigger, the most recent swing low was here, not here. That makes a big difference, okay? Least amount of risk provides the greatest potential, okay? Now the swing high was 59.52 1/4. So 38.48 is 10 and 4. So that's 14 times 20. Times $20 per point. Okay. All right. Now, did price move higher? It did. However, if you're trailing your stop, okay, when price starts to pull back, you're not gonna get it all. Whether you're trading to a fixed target and or trailing your stop, you're going to almost always leave something on the table. Now here's an example. Price gets back below the trigger. Off we go again. And this time we made it up to 59.49. So that's going to be 11 times 20. Okay. All right, so that takes care of the NQ. What do we have left? Bonds. Now, bonds produced $1,000 per contract yesterday. Today was a bit of a different story. See, yesterday, here was the move. So 153.28. We actually went through $1,000 per contract and dropped all the way down to 152.15. From 153.28 to 152.28. A 1 point move in bonds. There's 32 ticks to a point. Pays 31.25 per tick. I don't recommend bonds for those who are new to trading. I don't even recommend it to those who've been trading for some time, unless you have been specifically trained to trade bonds, or you have a knack for bonds, or you're drawn to bonds, or you've been trading bonds for some time. There are just other markets that are a little bit kinder. Okay, all right. Last night we dropped to 152.08. Okay, now this would have required your stop to be here, which is probably a little too rich for most folks. Remember, we only risk $300 per contract. Okay, so from 152.09 to 152.19, so that's 10 times 31.25. That's $310 per contract. So that's not a trade that we have taken based off of the 30-minute chart. Okay. On the long side for bonds, 153.06, no trigger. After the bonds, we got two markets left. We got gold, which is surging off the Fed announcement. But again, even though in the alert last night we said to consider buying 1253, which is right there, 1253, not a trade we would have taken. Why? Because it came on the heels of the Fed announcement. So how long do you have to wait? That's always a question. How long do I have to wait after the news, after the crude inventories, after the Fed announcement? With crude inventories, 15 minutes to half an hour. With the Fed announcement, typically same thing, probably closer to a half an hour. Okay, I see this thing is still surging, right? We're already up to 1255.50. So from, that's not right. Let me fix that. 1253. There we go. 1253. The swing high so far. 55.50. But again, not a trade that we would take. Okay. Sell 1248. The first move down was good for $190 per contract. The second move, $250 per contract available. On this first move, see where your stop would be. On the second move, see where your stop would be. Okay. The smaller, the least amount of risk will often lead to the greatest earning potential. Okay. Now, did it move further? Did it go lower? Yes, it did. Now, if you're trailing your stop on this pullback, that's when you're going to get taken out. There is the philosophy that says you leave your stop. If you read the book Trading in the Zone by Mark Douglas, he goes into great detail about once you assume the risk, and he's referring to those who are trading multiple contracts. Rather than moving your risk, you simply pay yourself on the way down. Okay? If you don't have a copy of Trading in the Zone, reach out to me, support@cfrn.net. I'll get you a copy of the audiobook, and Mark Swida will still get her royalty. Okay? All right, the last one, the one we haven't covered yet, soybeans. Big day in beans yesterday. When we measured it, it was $900 per contract. There was a pullback and then a continued move down. But again, if you were trailing your stop, this is where you would have probably been taken out. And see the amount of risk right there? Very little risk, biggest potential gain. All right. So last night, now beans don't open until 8 o'clock, so we've got to use the 2000. There we go. All right. Consider being long at 10.10, no trigger there. Consider being short at 9.88. Now again, the most recent swing high is here. So unless on a smaller time frame, such as a 5-minute, you were able to find an entry, this is not a trade that you were taking. Each night you get 8 markets, 2 trades per market. That's 16 potential trades. And because important prices and important areas are almost always tested, that 16 potential trading opportunities can become 20, 30, some days 50, depends upon how active the markets are on any given day. And using the S&P 500 as a bellwether, I mean, look at the Fed announcement here. Okay, we actually, this could be the quietest Fed announcement I've ever seen. I think I said that last time, but I think this one's even quieter. We've got a low 24.73.5 and a high of 77.25. Back in the day, when the Fed had bullets in the interest rate gun and could actually surprise people, we would see 10, 20, 30, 40-point swings back and forth and back and forth. And those of you that were around remember all of that. But if you're new to trading, we just pray this is not the new normal. And I know that it isn't, because everybody on Wall Street wants to make money. So while everybody is trying to take stock of this new landscape with Trump and all that he brings, we are going to have to be patient. Even this, okay, although it was nice to see yesterday, swing low was down at 66, swing high was up at 78. It's only about 12 points. Average daily range for years on the S&P has been 20 points. You can use your ATR tool, insert indicator, volatility, average true range, use that and go back, and historically you'll see. And so it's quiet for now. Just waiting for it to wake up. Okay, that's going to do it, guys. Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And because the streaming computer is giving us issues, we'll have no outro. Just remember, trading is risky. You can lose all of your money and then some. Always consult with a licensed investment professional before making any investment decision. Thanks again for tuning in. We'll see you back here again tomorrow. Same time, same channel. Take care.